All right, well, we'll go ahead and get started. So welcome to the Money Matters. This is our third video and our third webinar, I should say. And we are talking today about first-time home buyer and how to help a loved one buy a home, because there's great ways you can do that. So let's get going here. This is part of an educational series. It's not just a one-time thing. It's the fourth Tuesday of each month. We have assembled a wonderful panel of financial experts, and one of us usually is presenting each month. Our objectives: we want to serve our clients and guests through education. We want to help them make their strongest financial decisions. And we, of course, want to deepen the relationships that we have with them. And that helps generate referrals, but also just helps people, and that's what we're about. So here's our agenda for the night. We're gonna do an introduction of our panel. We'll talk about future topics, what we're going to be covering next month. Then we'll jump into the presentation that Ryan and I have prepared. We'll hang out for a Q&A and hope to wrap up by 7:30. So let's start with introductions, and we'll just go in order of the beautiful faces on the screen. Angie, would you introduce yourself and tell us who you are? Got to unmute first.
Yes. Welcome. I'm Angie Finch. I'm the broker owner of New Day Property Management, and I look forward to this evening.
Great. Jerry.
Hello, I'm Jerry Paulison with Edward Jones Investments, a financial advisor, and I'm honored to be here this evening.
We'll skip Kelly, but I'll tell you, she's our tax and accounting professional. She, I'm sure, is just up to her eyeballs in tax returns right now. So, Brian?
Yeah, hey everybody, my name is Brian Galetta, and I have a local insurance agency in town. So home and auto is what a lot of people know us for, but we do much more than that, pretty much anything insurance related. So definitely here to help answer any questions I can, and appreciate you guys joining.
Cool. And you do commercial insurance too, right?
Yeah.
Cool. All right, Ryan, we'll hear more from you later, but introduce yourself, please.
Hi, I'm Ryan Jahnke. I'm a loan strategist with 719 Lending. So we're a wholesale mortgage brokerage in town, helping people buy houses, refinance, and just strategize wealth building through real estate.
Well, and that's a good point. I'm glad you said that, because, I think it's 95% of the millionaires in the country made their money in real estate. So very important to building people's personal net worth. So I'm Ray Brown. I'm with Remax Advantage. I help people buy and sell residential real estate and commercial real estate. So mark your calendars, the fourth Tuesday of each month. We will be taking the summer off, though. I think we're going to go through, what'd we say, April or May? We've got the calendar here coming up. But realize you are an invited audience. All of us handpicked people that we thought this would be appropriate for. We've done the February 28th owning rental properties that Angie covered, and then tonight we're doing this one. And then April 25th, Jerry is going to be our featured speaker. He's talking about short, intermediate, and long-term investing. So that's going to be a good one. And then May 23rd, Brian is going to be coming in and talking about the insurance piece of the puzzle, probably real estate and beyond, I would think. So, and then we're going to take June, July, and August off, and we'll be back September 26th for estate planning. And we're going to have a guest speaker. We have an estate planning attorney that we've invited to come be our speaker. So my mouse is not working. Okay, so featured speakers, me and Ryan. Please feel free to make use of that Q&A, and then we will go into an extended Q&A at the end. So let me switch to a different screen. And I'll start into my presentation. So look how lovely my screens are now. These are ugly slides. Sorry. They get a little better. But I'm going to cover the home buying process, and then Ryan's going to talk about the financing piece. Is that the order we're supposed to go in, Ryan, or were you supposed to go first?
Absolutely.
Okay, all right. So I'm going to crank through this, and this is being recorded. I'll be sending the recording out to everyone. So we're going to talk about who works for who, the home buying process, the 10 commandments when applying for a mortgage. Ryan's going to jump in on that. And then 10 deadly mistakes when buying a home. We're going to talk a little bit about searching online for a home, because that's where most home buyers start. And then we'll talk about working with builders in case you want to build a property, build a house, and then we'll talk about some house hunting tips. So first item is seller agent versus buyer agent. It used to be back in the dark ages of real estate that all the agents worked for the seller. And an unsuspecting buyer had no idea that when they told their deep, dark secrets to that agent that they thought was working for them, they would scamper over and tell the seller everything that the buyer had told them. I'll give you a real life example. My wife and I bought our first home in Denver, right off of I-25 and Colorado Boulevard. And I think the house was priced at something like, I don't know, $75,000. It was way back, a long time ago. And we thought we were being good with our agent, and he showed us some properties, and we said, well, this is the house we want to buy, but we only want to offer, I think it was like $72,000. And then I turned to my wife and I said, but we'll pay the full price, right? If, the seller comes back at full price. And we said this in front of the agent. His name was Ken. And he said, oh, that's true. That's great. You guys are really smart. Little did we know, he was going right over to the other agent saying, here's their offer for 73, but I heard them say they'd pay 75. Now that's dirty where I come from, but that's how they used to do things because the seller was paying the commission, and they still do most of the time, but that's how it was. And so you didn't know that. Most people didn't know it. So I guess it was about 25 years ago, the state of Colorado said, we want to make sure everyone knows who's really working for who. And they said, you're going to have seller agents and buyer agents. So just realize that that's what we have going on now. So seller agent, they represent the best interests of the seller. Their whole job is to get as much money and the best deal they can for their seller. Now they have fiduciary responsibilities, which means financial. And then the agent must give the buyer material information and facts. So they can't hide facts, they're not supposed to, but really they have the best interest of the seller in mind. The opposite is the same of a buyer agent. Their job is to represent the best interests of the buyer. And the buyer agent owes fiduciary responsibilities to the buyer. And the agent, again, must tell the buyer material facts they know about the house or the situation, but they also must tell the seller's agent material facts about their buyer. So let's say the buyer agent realizes halfway through the transaction, the buyer can't get the financing. They have an obligation to share that information with the other agent. They can't disclose it. So everybody has to deal fairly with each other. So there's a third agency, it's called transaction broker, and it's where maybe one agent plays kind of like the role of a referee between a buyer and a seller, and they can't represent the interests of either party. They just have to deal fairly and equitably, share information evenly with both parties. So that doesn't happen very often, but it does happen from time to time. So, but that's who's working for who. The home buying process starts with, it's very important, everybody sit up straight and pay attention. You find a realtor that you can trust. And here comes the most important part of this concept. It's this guy. Now, if you do have another realtor, I would never ask you to end that relationship with them. So this is just kind of a joke. But if you have a good realtor, stick with them. I wouldn't want to pull you away from somebody else. But if you don't have one, I would love to take care of you on this transaction. So second thing is we establish your home needs and wants. So we sit down and say, how many bedrooms do you need? And this is where I start prying into people's lives. So I'll have a young couple who maybe they're dating or they're engaged. And I start asking questions like, do you guys plan to have children? And it's amazing. Sometimes they haven't had these conversations. And so I've never ended a relationship for a couple by asking those questions, but I've created some stress and tension, unfortunately. But that's important to think future. A lot of people are just thinking now, the house I want now, and they're not thinking about long-term needs. So I'll try to focus you on that. Then we get you pre-qualified with Ryan to make sure that we find out what your buying power is. How much can you borrow given your situation? And then we start touring homes, which is really a lot of fun. And the sequence of this is very important. We want to get you pre-qualified for a loan before we start kicking tires out there, because we don't want to disappoint you. It's also unfair to the home sellers. It's unfair to the agents. And it can be a waste of time and energy and resources for everybody involved. So we want to get you pre-qualified ahead of time. Once we find that house, we write an offer and we negotiate, and they may send a counter offer. So we'll send them here's what we want to pay for the house. Here's how we're going to finance it. Here's what we want included. You want your hot tub or whatever. And then we go back and forth until we come to an agreement. And once we get the agreement, buyer has signed, seller has signed, we are under contract. And then we get the title work and the HOA documents. If there is an HOA, we want those documents to make sure you're comfortable with the community and their financial situation. Then we get into inspections. So, and an inspection is different from an appraisal, okay? So I'll cover that in a second. But the inspection, we go in and we look at the condition of the property. It's really intended to uncover latent defects. And a latent defect is something that a buyer wouldn't normally notice just by walking through the house. So if an electrical outlet, for example, is wired incorrectly, that's not something you would know as you're walking through the house. But if you see a door that's broken off its hinges, well, we know that going in. So it's really not something that we would necessarily want to ask for at the inspection time, because you're buying the house knowing that that door is busted. So the lender will give conditions. And what does that mean, Ryan? Conditions on lender conditions?
Yeah, there's a lot of rules, and most of them are set by the government as far as the proof that you have the ability to repay the loan, and that this is going to be a good loan, that you're going to make good on your word. So it's all those little different items that we have to prove as the broker to get you funded for this loan.
Okay, cool. Thank you. That's helpful. So we've got one going right now where, because when a lender is approving a transaction, they're approving the buyer. They've got the money, they've got the credit score, they've got everything they need, but then they also have to approve the house. So that's two pieces to that conditional piece. And then we get to the appraisal. An appraisal is different than an inspection. Inspection is about the condition of the property. The appraisal is what is it worth? And the reason the lender wants to do an appraisal is, heaven forbid you stop making your mortgage payments. The bank wants to know if they take the house back, can they take it and sell it and get their money back? So that's what the appraisal is all about. Anything to add on that, Ryan?
I mean, just that, I mean, in reality, a lot of this process is a pain in the butt for you as the buyer. It's
Yeah,
just
that's true.
it's just designed that way. But if you think about it in terms of like, someone is about to give you $300,000, it kind of makes more sense, like why there's so many stipulations, right? So yeah, we just try to lead you well through this process, both Ray and myself, and help you know what's coming up, what needs to happen, and you just stay patient and you keep answering the questions, and then eventually it finishes.
Yeah, it takes a while. And with the mortgage meltdown that happened back in the 7, 8, 9, 10, 11, lenders started requesting just a ridiculous and increasingly number of documents, most of which are required. So, all right, then we get to closing day. Woo! So that's kind of the process of buying a home. And now I want to make sure you know what money is due up front. Earnest money, usually it's about 1% of the purchase price. So if you're looking at a $600,000 house, it's usually about $6,000. Inspections, when you go to do an inspection on a property, they kind of start at $450,000. If you want to do a radon test, that's on top, they'll add more to it. If you want them to do a lead-based paint inspection, that's more. If you want a sewer scope, it's more. So it starts around $450,000. That's just to get the inspector out there. And I want to say too, an inspector in Colorado, realize you need 0 credentials or training to be a home inspector. 0. There's no licensing. There's no certification required. My children, when they were young, could have said, I'm a home inspector. So there's nothing. They do have certifying entities out there that will put you through training or at least give you a test. Some of these certifying entities are no good, but you don't want to just hire any inspector. So we can connect you with some good inspectors. The appraisal will run, Ryan, what, $650 to $850? Did I get that number right?
Yeah, because let's say the basic cost is about $725. But if there needs to be some sort of re-inspection, like something had to get fixed and then the inspector had to go back out, then they charge usually another 150 to go back out. So yeah, if you have a plan of about 850, you should be pretty safe.
Okay, but you got the 850 for the appraisal plus 450 and up for inspection. So you do have to have some cash and be ready for that. So, all right, 10 commandments when applying for a loan. And I go put Charlton Heston on here because I'm so clever. Ryan, I'll click through and you can read them. All right.
Yeah, please. All right, thou shalt not change jobs, become self-employed, or quit your job. This will very much stop your loan in its tracks. So self-employed people can totally get a loan, right? I was self-employed for a very long time. You just need to have a 2-year history. Now there are some loans that let you have, if you're at it like a year and a half, that it'll still work. But the general rules, as we'll see even later, is that, it's 2-year history in these things. So try not to change jobs or do anything big during the process.
And it's
So
2 years in the same industry, right? So you can go to a different employer, but you shouldn't while you're applying for a loan.
Yeah.
Okay.
Yeah,
Sorry.
it's we can definitely talk through that. But yeah, another thing that sometimes people see and they want to buy that new car to go in the driveway of their new house. And it's a terrible idea. Don't do it, right? Like just don't apply for more credit because that payment can easily stop your loan. Number 3, use charge cards excessively or let your accounts fall behind. So up until like 2 days before closing, your credit is checked. So, if you add an extra card, if something shows up, if there's a derogatory item, it can definitely stop the home purchase. So you got to just really behave well with your credit cards during the process. And then one more thing about credit cards is that, you want to use them responsibly for a good period of time before even applying for a loan, because they can really help or hinder your credit score. Number 4.
Now wait, Ryan,
Wait.
before we do that, there's a chat question. What about transferring credit card balances?
Kind of what we go for, like when we're qualifying for a loan, is the total payment. So like if you have 2 cards that are already open and you can shift the balance to one that has a lower payment, I mean, that can potentially help you. Usually like the general rule though is like, if you use more than 30% of a credit card's available balance, it's going to start negatively affecting your credit score. So in other words, if you're allowed to have, if you have a credit limit of 10 grand and you go over 3 grand, even with the balance transfer, that can make your credit score go down. So you definitely have to be careful about it.
Cool.
All right. So number 4 is spend money you have set aside for closing. Okay. There's some money that needs to go into buying a house, even if we get down payment assistance, and we will talk about that. You or family members, there's got to be some money. So don't let yourself spend that money that you've got set aside. Or lastly, for the thou shalt nots, omit debt or liabilities from your loan application. We really need a full truth of what we're working with, because sometimes when things pop up later, I mean, they're going to be found one way or another. Again, you can be all excited and ready to move into your new house, and then, the bank finds out, you've got an RV payment or something, and then it stops the whole thing.
Or a tax lien. I had somebody who owed the IRS, I don't remember how much, but they were making payments to the IRS, and they didn't consider that when they were making their application. They weren't trying to leave it out. They just forgot about it. So, all right.
All right. Yeah. Another one, buy furniture. So, even when it's sort of like 0% down, no payments for a year, it still shows up on your credit history. So you just got to wait until you get the keys and you move into the house. And number 7, originate any inquiries into your credit. You just have to be able to explain them, whether you got credit or not, because you're going to be asked about, hey, did you, I guess American Furniture Warehouse checked your credit. Did you get something? Did you buy something? And if it was on credit, then that'll have to be approved.
Oh, we lost your audio, Ryan. Or I did. Can you guys hear him?
I can't hear you.
I'll take it over. I think that was the takeover gesture, the universal Zoom takeover call. So number 8, thou shalt not make large deposits or withdrawals without first checking with your loan officer, because they want to know where'd that money come from. They just assume you borrowed it. Now you've got more debt. So that's a big deal. And withdrawing money, they're like, why'd you take that money out? Did you go buy something? Because remember, they're the ones with the money and we're asking them to loan it to us so we can go buy a house. They get to make the rules. They can be as paranoid as they want. So number 9, don't change bank accounts, because they're tracking that. They want bank statements. They want all that. And number 10, do not co-sign a loan for anyone. That will show up on your credit as well. So did we lose you, Ryan, completely? Are you back?
Can you hear me or no?
Yes, we got you back.
I think Jerry had a comment on that last one.
Okay.
Go ahead, Jerry. Yeah,
Jerry's, you're muted too.
you're muted too. Yeah.
When
There you
Ray
go.
said number 10, do not co-sign a loan for anyone, my reaction was ever.
Not just when you're getting a loan, right?
Yeah.
Just realize if you co-sign a loan, you're going to be paying it off. That's just anticipate that's what it is. Don't be mad about it. Just know
It's
you're
a
going to
gift.
be paying that loan. It's a gift.
Yeah.
That's right.
And you're lucky if they pay it back.
Yeah.
Scripture says, right? Give without expecting to receive it back or
Mhm.
give good return. So, all right. Ryan, anything to add to my commentary on those last few?
No, I think that was great. So I think the lesson there is just, once you actually start the loan process, you're under contract. You got to really play nice and be very conservative.
Cool.
And it's only for 30 days, 40 days.
That's true. Let's see, Brian, anything to add or any comments on that from the insurance side?
Not too much, just that most people don't really think about it, but your insurance is affected by your credit score. So we don't pull credit reports, but we use something called a credit-based insurance score. So the number of credit cards that you have, any delinquencies, even probably one of the most common things is unpaid medical bills. People think that their insurance picked up a $100 or $150 copay and it didn't. And then those things get sent to collections. So even though we don't pull a credit report, major factors get reported and your credit does play a role in your insurance rates or be able to even qualify for a policy. So.
Wow. Okay, good to know. Cool. All right, 10 deadly mistakes. Number 1, choosing a transactional real estate agent or lender. These are people who just want to get their sale, get their commission. I hate those people. They're all focused about me, how much money can I make? I remember when I first started in real estate in my RE/MAX office, and this guy's out of the business now, but I was talking to him and he said, this is what he said. He said, never let your buyer buy a used house. Always take them to new construction. And I said, why? And he said, because you get extra percentage, you get more commission when you do that. And I thought, what a dirtbag. And I was brand new and I knew better than that. But anyhow, he was very transactional, was not interested in a long-term lasting relationship to take care of his clients. So make sure you're dealing with somebody who's going to take care of you long-term. I tell people, when you buy a house through me, I come with the house. So second one is making an offer without being pre-qualified. Big mistake, because they won't even look at your offer if there's no letter from a lender. Not knowing the total costs involved. That's where Ryan will come in and help us with that on the loan side. Limiting your search to open houses, internet results, and other ads. Let a real estate broker do their job for you. So yeah, let them work for you, and they will. They'll find houses. I have houses that I know I'm going to be listing in about a month, over the next 3 months actually. And all of those sellers are like, yeah, if you know somebody who wants to buy our house, we don't have to go through all the hassle of cleaning it up and getting it on the market. Just bring us a buyer. So let a broker do their job. And we talk in the office about that stuff too. It's like, I got this buyer coming up for maximum purchase price $450, and somebody's like, where do they want to live? Tell me about the house. And we start working the deal before it even hits the market. So anything else on that, Angie? No.
No, I think that's great.
I think so. I think so too. Thank you.
Yeah.
The other mistake is thinking there's only one perfect home, and that's a big deal. because you got to realize that, especially if it's your first home, let it be a starter home. And if you have the stomach for it, buy it with renting it out later in mind. Think long term. And that's where your transactional real estate agent, they won't think about that. They wouldn't want you to rent that house out. They want you to sell it so they can get another commission. So you want a long-term relationship with an agent who's going to help you, and they'll help you realize there's not just one perfect house out there. Other mistakes, not considering long-term needs. We've talked about that. Not doing your due diligence. Sometimes people need to go park a car on the street that they're considering buying in and just see what happens in the neighborhood. How many cars go roaring by? Are there crazy neighbors in the neighborhood? That kind of thing. Another mistake. Oh yeah, Ange, you're muted, dear.
Yeah. And all different times of the day.
Yes.
North facing, south facing, schools, all of that.
Oh, talk about north facing, south facing, because that's
So
a big deal.
Colorado Springs, especially, or Colorado, is really important because if you have a north facing driveway, you will be dealing with ice for 5 months, especially if you drive on it. So that's really important, just to help you preserve the integrity of your concrete. You're breaking your neck, all kinds of things like that. But future
Yeah.
sales, you have a lot of folks that ask about that, don't you, Ray? And Ray is great that he points all those things out.
Yeah, I've got a couple moving here from Pennsylvania, and we were out looking at houses, not this last weekend, but the weekend before in Black Forest. And 3 of the 5 houses that I showed him on Saturday all had north facing driveways. And so I told him on the first one, I was like, you like to shovel snow? Because if you buy this house, you're going to be shoveling snow all winter, buddy. So,
or people that don't come from snowy states and come from Arizona don't even think twice about it.
Right. Big deal.
Right.
Yeah, Jerry.
To that very point, another thing would be if you're the type of person that loves to have your morning coffee in your favorite spot in the home and you want it to face east so you have the sun. Something to think about.
Yeah, it is. That's a big deal. Or your evening cocktail.
Amen.
Right? So, amen. Another deadly mistake, not having a home inspection. Not examining insurance issues. And I paused to see if Brian has any input on that, because that's why he's here. He's the expert.
Well, yeah. So like the insurance piece of the puzzle, like the property itself is a major factor, right, in the cost of insurance. And it can be simple things from just the cost of like rates of like a concrete tile roof versus like an asphalt shingle roof. But then you have things that are actually, going to stop, or it could be a major problem if you do have a claim, like Federal Pacific, stab lock panels and polybutylene piping and stuff like that. Stuff where, somebody may decide to purchase the house knowing that that's there. But we look at the county assessor and the regional building department and we look at people's, home inspections. So at least people can be knowledgeable about what they're covered for and what they're not covered for. Because at the end of the day, like nobody wants to pay for insurance, but you hope that when you pay for insurance, it actually works when you have to use it. And that's the worst thing is when, especially first-time home buyers file a claim because they think they're covered for something and they're not.
They're not.
So looking into, if you're thinking about you have a couple different properties that you might go under contract, contact your agent, have the agent do a soft check into the property and check out the major things that agent knows to check. Because it even depends on the side of town that you're in. Here in Colorado Springs, down on the west side of town, there's still a lot of clay pipes and a lot of really old aluminum wiring and stuff that you kind of have to be careful for. So.
Yeah, knob and tube, that stuff, I've seen it up in the attics of some of those beautiful old houses on Nevada. So those are good things. And if you don't know what polybutylene is, or aluminum wiring, or what was the other one you mentioned? Stab lock, Federal Pacific, the clay pipes, we can talk afterwards. Give me a call or send me a text or an email. I can update you on those. The other deadly mistake is not purchasing a home warranty. Now that's not insurance, but it covers the replacement if the furnace goes bad. You purchase a home warranty for like a year at a time. So it might cost $500, $450. And if your furnace goes out or the water heater, they don't pay for the full replacement, but they cover a big chunk of it. So it's always good, I think, to have a home warranty, or at least consider having one. So yeah, Ange.
Ray, could you touch back on the due diligence? I think we we kind of got in conversation and skipped over that because I think HOA, you kind of mentioned them before, but
Yeah.
a huge part is really know what your HOA covenants are, not just the short, but take time to read them because you could have dog issues, you could have parking issues. I have HOAs where I manage properties, single family homes where people, if they're entrepreneurs, cannot park their commercially marked vehicles. You
Right.
can't park on the street, you can't park in your driveway, you have to park in the garage. And we're not even talking about RVs and all of that. That's just parking your own car has to be in your garage. And does your truck fit? Or, so that sort of due diligence is really important.
That's huge. And then the other piece is property taxes, looking at how much your property taxes are going to be, especially new construction. I was just talking with a friend today about that. And the new construction, when you see the taxes on new construction, it's for dirt only. As soon as they build a house on it and you've lived in this, you moved into this house and you think your taxes are like $700 a year. As soon as you move into it and the assessor says, hey, there's a big, beautiful house on this property now. Guess what? Your taxes are $4,000 a year. So that'll impact your payment. So that's part of the due diligence that we're talking about. Thanks, Angie, for reminding me of that.
Yeah, Ray, with those new builds, remember the metro districts too. So it's not even just like you might have high taxes and a high HOA, for a new build. So you really got to look at that stuff.
Yeah, and if you want information on metro districts, let me know. I'll give you some info on that, guys. That's a big deal too. And the good thing is the state of Colorado legislature, I'm critical of a lot that they do, but right now they're looking at how to manage this metro district thing that's coming up with a lot of the new construction developments. So it's a big, big deal. All right, so we're going to talk about searching online. I'm going to go pretty fast through this because I want to make sure Ryan has enough time to cover his material. Syndication of listings. When we put a house on the market, we send it out to everybody on the planet. We want everybody on the planet to know that it's for sale. But these portals like Zillow, Redfin, Trulia, they are hungry for content, and that's how they attract visitors. They don't care about real estate. They make their money selling your information. So you click on something to say, yeah, I want to get some more information about this house. Well, you put in your phone number, your email, your address sometimes, and you will get deluged with calls from real estate agents, from home inspectors, mortgage lenders. These companies like Zillow, Redfin, and Trulia, they traffic in information, and they're using real estate as an excuse to get that information and sell it. Now I was so glad when Zillow lost $400 million, I can't tell you. So they're interested in two things: clicks and gathering information that they can sell it to everyone on the planet. And they will. Anybody can buy that. Real estate agents pay in blood for these leads. Then they fight tooth and nail. They'll sell one person's information to 10 different real estate agents, 10 different lenders. It's crazy. Now, accurate or not, they put the information about the house out there on the internet. Because again, they don't care if it's accurate. They just care if you click on it, and they want you looking at their website. A lot of times buyers find that properties on these websites are no longer for sale. They're inaccurate details or incomplete and incorrect estimated values. Zillow, my friends, has no idea that one property that looks exactly like another house, one of them's right across the street from a gas station and the other one backs up to open space. They will call them the same value. Zillow's an idiot. All right. So use a buyer agent to help you find a place. We've got the most complete inventory. We have current information. We can give you a more accurate estimate of value, market status, what's going on in the marketplace. We have proprietary tools for locating homes. And the seller usually pays our fee, a buyer's agent fee, even though we're working for you, negotiating against the seller, and 99% of the time they pay us to do that. So that's a good thing. Working with builders, just realize the people in the office are working for the builders. Their whole job is to get as much money out of you as possible. Their whole job is to sell houses. They have a professional representative. You should have one too. If your real estate agent doesn't accompany you the first time you go in to meet with that builder, a lot of times they won't let you have a real estate agent represent you, or at least they won't pay that agent to represent you. So we've got knowledge of the market. Building a home is a complex process. We can help you find the right property, We can help you navigate construction complaints and issues. I'll save it for another day, but I've got several examples of when I was working with a buyer who was working with a builder, and the builder didn't want to do the right thing. And so we kicked up a fuss with the big old heavy bat of Remax and got it resolved. So plus you get another set of eyes and ears during the construction, and we can help with closing assistance. But like I said, it's critical that your agent accompany you on your first visit to the model home. Otherwise, they may not let you have representation. So, and there are builder incentives. When you go meet with a builder, a lot of times they say, hey, if you use our mortgage lender, we'll give you $10,000 towards your closing costs, which sounds so generous, but they make that money back. They're getting kickbacks, and the lender is going to make up that money somewhere. And Ryan, I know a lot of times you've defeated these big deals that they offer and shown the buyers that this is not the good deal you think it is.
Yeah, I mean, the bottom line is usually the builder owns the mortgage company. And, so they'll give you money off of the inflated lot price, if you use their lender, and then they can make money on the lending side. And so typically, like, the rates and the fees that I can present are better than the builder's lender. But then, I just have to help you compare, with this discount they're going to give you, is it worth the bloodletting, just to get into your house? Very few people have a good experience with the builder's lender, but sometimes it is the cheapest way to go. I'll help you look at it, and I'll give you an honest opinion, and then I'll be there for the rest of your life when you actually need financing in the future. But yeah, it's a challenge with the builder's lender.
And they don't have to give good customer service because they got a built-in deal.
Yeah,
right?
And they're representing the builder. They work for the builder. Like, somebody like me, I work for you, and I have to do a good job. Otherwise, I have no future referrals or work. Right? So.
That's right. That's true. I'm going to skip house hunting tips or blow through them. Location counts, make a list of needs and wants, do your homework. Don't go looking till you're pre-qualified. Use a checklist or form. So take some notes as you go in these houses, and wear comfortable shoes and clothing. A lot of times they want us to take our shoes off. So wear shoes you can just slip on and off. And then here's the one, don't mean to offend anybody, but find a sitter if appropriate. So many times I've seen young families go into a house and the kids are all over the place, and the parents don't really even get to look at the house because they're so busy pulling the kid off of their furniture, stopping them from playing with the kids' toys, quitting them from poking the bunny in the cage or whatever. So it can be a real distraction for a buyer. So, all right, Ryan, you're up. I'm sorry to take so much time, but please take it from here.
Okay, great. Can we see my screen now? Excellent. All right. So a couple things. One of these things Ray already actually covered, but the cost before closing. So these are things that, the earnest money typically is coming straight out of your bank account. You're writing a check that gets held at the title company. The appraisal and the inspections that Ray already covered, those typically go on a credit card. So that's not necessarily cash you need, but it is real money that you'll be paying in a month. So let's move on to the next one. All right. So when you're buying a home, there's 3 different costs you got to be prepared for. One is your down payment. So the great news is if you're a first-time home buyer, there's a lot of loans that allow you to only put 3% down. So if you're buying a $400,000 house, which we'll call average single-family house in Colorado Springs, that's $12,000. That's got to be taken care of somehow. The good news is that if you're buying your own home, all $12,000 of that can come from family or come from gifts, right? So that's one of the things we wanted to address this evening, is let you know that 100% of the costs for buying a home can really come from gift funds. And I would say probably a good 75% of the first-time home buyer loans that I do have some version of gift funds from family. So it's worth starting those conversations, because a lot of times your family does want to help you get a leg up, because people understand how important it is to have your own home. So that's the down payment. That's sort of your skin in the game that the lender requires you to have in order to lend you the rest of the money. All right, then we've got closing costs. And, as it says here, about $3,700 is average. And closing costs are just all the taxes, transfer fees, title insurance, all that stuff that, we can go through and you can learn along the way, but we don't need to do them in detail tonight. And then finally, there's this thing called escrows. So what that means is that's your homeowner's insurance and property taxes that become part of your mortgage payment, as we'll see in just a second. And you actually have to fund those ahead of time as part of your closing. So closing costs in total, if we connect these two over here, is somewhere between $6,000 and $7,000 on top of the down payment. So this is what you have to be prepared for. All right. So if you have no down payment, there are plenty of options for you. All right. So we got gift money that I already mentioned. We have down payment assistance. So we have multiple different down payment assistance options that we can go through. And the great news is those can provide all of that down payment that you need. And then usually you still have to cover the closing costs. So, let's say you only have $7,000 saved. Well, great. I mean, most of the time, as long as your debts are not too high, we can get you down payment assistance. Sometimes Ray, in an offer, can ask for seller concessions, which means money that the seller is willing to give you to help you buy their house. Well, that can help cover your closing costs. So we'll kind of have a team environment as far as how we can figure out how to pay these needed costs between what you have, what you can get from family, and what the seller can give you. All right. There are a couple loans that don't have any down payment assistance. So one of those is the USDA loans. That's the Department of Agriculture. I mean, you got to buy, more of a rural area, right? But we're close to Callahan. Any of those areas out there, a lot of them can have USDA loans. They also have income caps. So like if you make too much money, it doesn't really work. But the VA, if you have any sort of service in the armed forces, one of the greatest benefits is that you can get a 0% down payment loan. And it makes it so much easier for a lot of people to get into houses.
And just to clarify, it's not 0% on the loan, it's no down payment, zero down payment.
Oh, my apologies on that. Yeah. And you still have to qualify for the full payment, monthly payment, just like any other loan. But yeah, it does help so you don't have to save those down payment funds. So on to our next one is there's sort of a rule of two here when you're qualifying for a loan. So sorry, I'm moving things around. I just had to look at it. So one of the things that we need is we need 2 years of tax returns, 2 years of W-2s, 2 months of bank statements. And it's basically like if you're trying to have a good paper trail that's going to let you prove your income and prove your ability to repay, that's what we're looking for. So make sure you have your tax returns in a PDF document that you could upload to our document collecting website. Make sure that you get pay stubs. And if you don't get pay stubs, we got to find a way to have some sort of trail on what you earn. If you're self-employed, that's where the tax returns really come into play. So start making sure everything's really documented. You may want to even consider not writing everything off because yes, you do have to show some income if you want to qualify for a loan. So just realize that writing off everything, the couple of years before you want to buy a house is not always the greatest strategy. I wanted to go over real quick how important your credit is. So your credit score is made up of many different pieces. Down here at the bottom, it says age and type of credit. 21% of your FICO score is what it's called, the Fair Isaac Corporation score. So your credit score, as even Brian was mentioning earlier, affects a lot of things. It affects how much you pay for insurance. It affects your loan. And what's really interesting is in the last few months, the federal government made some amazing changes to benefit first-time home buyers. So if first-time home buyers make less than 100% of the area median income, so in El Paso County, that's 96,200. So if you make less than that, you only have to show a minimum credit score of 620, and then you can have the same interest rate as someone who is an 850 credit score borrower, putting 40% down on their home. It's almost ridiculous and it doesn't make sense, but it's to help people buy houses, first time houses. So friends, even if you don't have amazing credit, it doesn't matter as much as it used to, but you got to protect this. It affects everything in your financial costs all the way through your life. So that's why I wanted to bring up, it's still important. Yeah, Angie.
I just wanted to add, oftentimes people will, pay credit cards off and then cancel them. I see that because I run credits, very important when I'm renting to tenants. And I see where they've had long-term, bank accounts, and then they just close them instead of keeping like a minimum balance and having that history of having a 10-year bank account. And that can affect your credit also, correct? Like it's better just not to use them, don't close them.
Yeah, typically your available credit is a good thing when you have unused credit. So definitely
don't close it.
Yeah, that also affects the length of your credit history. And so we want longer term relationships, which is what banks want. So those things will increase your credit score. So thank you for bringing that up. That was great. So now let's go about what your mortgage payment will be made up of, because there's actually different parts of it. So we got this acronym PITI, all right? And basically P stands for your principal. That's like you paying back part of your loan balance. In a typical 30-year mortgage, you're paying very little back of your debt for a very long time. Most of it is actually in interest, all right? But so part of your mortgage payment is your principal. All right, part of your mortgage payment is your interest. So that's kind of what you pay the bank for the privilege of them letting you borrow money. All right, so that's usually a very large part of your monthly payment. And the good news with owning a home is that that's a tax deductible expense. All right, so that can help reduce your income taxes, this interest that you're paying on your home loan. All right, then we've got the property taxes. That's what T stands for. So again, that is collected and paid for by your mortgage payment. So you're not going to have to pay that directly as a first-time home buyer. And lastly, I is insurance. So that's what Brian can provide. That's the homeowner's insurance, and it's required on homes with mortgages, and that gets paid for from your mortgage as well. Yeah, Brian.
So Ryan, I have a lot of people who come to me and ask, they were told that they have mortgage insurance and they get that confused with homeowners insurance. And I have to kind of like guide them the best that I can, but maybe you can, oh, dang.
Yeah. Yeah. So,
Well, but let me also say, I think it's important that, yeah, you can shop and get the cheapest insurance you can find, but it's not going to serve you well most of the time.
yeah,
I think that's
so,
a big deal. So don't just grab the cheapest policy. You really need to make sure you're getting coverage for the house. So
yeah. And just to be clear, what we're talking about, you've got homeowners insurance, and that's what you really need to make sure that you're protected and not just getting the cheapest policy. So that is what your insurance agent, you buy from your insurance agent like Brian. So now this second thing that we're talking about now is known as mortgage insurance. And basically what mortgage insurance allows you to do is it allows you to get into a house if you don't have that 20% down payment. So sometimes it's thought of in a very negative light, but I think it's fantastic, right? Because I mean, how long would it take you to save $80,000, to buy your first time $400,000 house? Like a lot of times house prices go up faster than people can save, right? And just getting into the house is one of the greatest financial improvements you can make, because as the owner, you are then benefiting from the equity that it's the ownership, the increasing in value of the market that happens over time. And that's one of the greatest generators of wealth for the average family. So yeah, I'm explaining mortgage insurance now. So it's required anytime you put less than 20% down on a home, because 20% down is kind of that magic mark where banks feel like you have enough skin in the game that you're not going to walk away, right? Because that's a lot of money. People don't want to just stop making payments and give that up. So if you don't have that much money, the 20%, you pay for mortgage insurance. And what that does is that protects the lender if you default, if you stop making payments. You do pay for it though, even though it protects the lender, it protects the bank. And it's simply an insurance policy that protects them in case of default. Okay, so those are some important, was there a question? No. Okay. But no, those were important, just sort of topics that I wanted to bring up and help you understand as a first-time home buyer. And then, I know there's a lot of concern now. Oh, that's it. There's a lot of concern now with prices being high and interest rates being high. Just know that there are options. As I just said, first-time home buyer loans got revamped, and it allows lower interest rates. We have down payment assistance that can help you buy a house. We have these cool tactics, I guess you call them, like called a 2-1 buy down, where the sellers are paying part of your mortgage payments for the first 2 years. So I would just highly encourage you, don't just sit on the sidelines. This is a great buying opportunity before everybody else jumps in, and actually before rates go down, because that's going to create a lot of increased demand that's just kind of pent up. People are waiting, and it's going to be harder to buy a house. So the earlier, the better.
Well, one of the best things you can do is own real estate during times of inflation. It's a big deal. And Ryan, we've got about, I don't know, 5 or 6 minutes left, but can you talk a little bit about how like a parent can help one of their kids purchase a home, what they're able to do?
Yeah. So one of those options that a parent, grandparent, aunt, uncle really can do for a buyer is to provide gift funds. So that can cover the down payment, the closing costs, really all of it. The second way is that they can be a co-signer or a co-borrower, which means they're literally on the loan themselves. So they are obligated for that loan. So make no question about it, right? If you don't pay, or if the main house buyer doesn't pay, that co-signer is obligated. But what it enables us to do is that your income and the income of the other borrower, maybe it's like a parent, gets combined. So it can allow you to qualify for maybe more of a home, the home that you want to buy. And so we combine the debts, and we combine the income to help qualify. So
and is there a cap on that amount that the parent or family member can gift to a buyer, or does it have to be a family member?
It has to be a family member or someone with a family relationship. So like, if you're living with somebody and you can prove that you've been living together, totally, that works too, right? You're not related family yet, maybe never, but it still counts, right? But for the most part, it's got to come from family. And that's the general rule. And there is no limit. All right. If you're buying a 1-unit home, the family member can pay all of the down payment, all of the closing costs.
When you say 1-unit home, you mean like a townhome, a condo, but not like a duplex, like buying the whole duplex, right?
Right. I think I pulled it up just a little bit ago. Yeah, if you buy like a 2 to 4-unit home, like a duplex and you live in one, or a 4-plex and you live in one and you rent the other 3, I mean, that might be a brilliant potential investment strategy. But then it does require some of your own money. I mean, there's different rules that the government puts on, because those are a little bit more risky. But really, parents can do great things to help. Angie.
I had a question too. When you have that assistance, is the loan still based on the main borrower's income to make that payment? Even though a family member is making the down payment and closing costs or co-signing?
Yeah. So the cleanest way to do it is it's only the, the first time home buyers. Maybe it's a couple, maybe it's one person on the loan.
Yeah.
And, their income has to qualify to make the payments. And then the family member can provide as much of the down payment, closing costs, the funds to make it happen.
Okay.
But yeah, so that's that. And I guess as far as down payment assistance, if you're wanting to get down payment assistance, you cannot have a parent co-sign with you. So almost really all of those programs are only for occupying or borrowers, people who are actually going to live in the home. So you can't kind of double dip. You either get down payment assistance or you can get, a parent on the loan, but you can't do both.
Cool.
That makes sense. Thank
Yeah.
you.
Yeah.
Well,
Great
Ryan,
question.
thank you for that. Yeah, we'll get some questions here. Let me share my screen. We're back on the Q&A on the pretty pink slides. But if anybody has any questions you want to chime in with, you can put those in the Q&A or raise your hand. I'm happy to unmute you if you want to ask it on the recording. And if you have any, let's see, grab. So I said I could do that. I got to figure out how to unmute Adrian and Kendall. You ready? You are unmuted. Adrian, Kendall, anybody?
They're still muted. They're still muted.
Oh,
Oh.
nope. Can you
There
hear me
they go.
now?
Yeah,
Okay.
we got you. We got you.
Sorry, I had to unmute as well. If your agent is both the agent selling your house and the agent helping you buy the house, do you have to pay them twice?
Everything's negotiable. Can't believe you would ask me that question. I thought you were my friend.
Well,
But
that's
everything,
why I didn't name you.
everything's negotiable. We'll talk about it later.
Okay.
I'm muting
Um,
you again. No, go ahead. Do you have
Okay.
anything else? Anything
Oh, I
else?
have a lot.
Okay,
Unless somebody else has their hand raised.
I don't think so.
Oh, go ahead.
How long does it take to get a loan approved?
That is a great question. So assuming that we've already done all the pre-qualified work ahead of time, I've already collected your documents because I had to prove that, you can close on this home. Once we get a contract in, it's usually 3 weeks to a month. Very rarely do we get more than a month to make that happen.
Okay, and then if two of us are going in on a house together and we're not married, can we both apply for a loan if we're not related?
Yes,
The
absolutely.
same
Yeah.
loan?
Yep. Yeah, there's absolutely no discrimination in lending, whether you're married, unmarried, single, related or not. So yeah, it can absolutely work.
And then what if like I already own a home, but my partner is a first-time home buyer?
Yeah.
Does that
Yeah.
make us first-time home buyers?
So it depends. I mean, your partner definitely. So if you're both going to go on title to the new home, then there are some loans that would allow that 3% down payment because of his or her status of the first-time home buyer. And then there's also FHA loans, which is a really popular loan, right? Federal Housing Administration loan. And they always allow a 3.5% down payment if you're buying a primary home. So there's definitely options for low down payment there too.
Okay, so one of my options is to get a home equity loan for like 400K. Could I get approved for a home loan while I still own my house?
Can you explain what you mean by if you typically a home equity line of credit is on your current home, right? It's like an additional loan on your current home. Is that what you mean?
Let me
Yes.
weigh in here too. And if I'm not speaking correctly, Kendall, let me know. But the idea is that to be able to purchase a home non-contingent, so buy a house, a new one,
Okay.
and then have time to make the move and then sell the other house to retire that debt. Is that right, Kendall?
You know, you've always understood me, Ray. Thank you. Even when we disagree, you understand me.
So, yes, that is a good place to get down payment funds. The payment for the money that you're taking out of your current home does count as a liability, whatever that minimum payment is, and that's got to be part of the qualification. So you got to have enough income to cover that extra payment. But yes, you can use that money to then put the down payment on the next house.
Okay, thank you.
Anything else, or should I mute you again, my dear?
As you have wanted to for decades, go ahead and mute me.
You are muted.
Brilliant.
Consider yourself muted. Well, anything else, anyone? Personally, I think this was very educational and helpful. So I hope the content was useful. Tell all your friends. We want you to share this. I'll be posting this video out on YouTube and on my Facebook group. And I think these guys, the panel, will as well. So any parting comments, anyone? Angie, Brian?
I think it was great. I really liked it. I like hearing about the new opportunities and loans and just options for new home buyers. When I have some tenants on and that I'm going to share this with, of course they're great tenants, but really I want people to reach their goals. And sometimes as a tenant, you don't realize how tangible that is. So that's what I love about our group. I love, like each one of you, that's why we work together as a team, is that we are about the relationship and what's great for our clients, because we know that's how we keep clients and help them grow, throughout their real estate journey, from first time to second home to rental home to, I like that. So great job, guys.
Thank you.
Yeah,
Brian,
and
anything?
just expanding on that a little bit, what Angie said about the team is, we didn't talk about it much tonight, but if you have a CPA or your accountant, and then of course your financial advisor, so Jerry, two very powerful educational tools to help you know what your options might be. I myself am self-employed and had no idea that I wasn't, doing the right things I needed to do on my taxes to, qualify for a refinance or something, even though I could pay for it. And that's because that goal wasn't established with my CPA. So just make sure you're using your team. If you don't already have a team or you're missing a couple of members, we're all here for you. And even if you're not looking at making a switch or something, we're all here for you to answer questions, because that's what we are. We're here to support each other. So
Absolutely.
Great point.
Jerry, any final comments?
No, I appreciate what Brian just said, because it truly, sometimes it takes a village, and to make sure we're comprehensively looking at it all so that we can help you the best that we can.
Yep, that's a big deal. So remember April 25th, short and intermediate and long-term investing with Jerry Paulison, the man. So thank you all for being here. Really appreciate it, and look forward to taking care of you or anybody you know that wants to move forward in life with their economic situation. So
That's right.
I think we'll end the deal now.